welcome. It's another Tuesday, and David is here, David Etienne, welcoming you to another video cast. It's Tuesday again, and as usual, we meet here at 8 p.m. Just a few housekeeping matters I want to get out of the way. Always need to remind you to check out our YouTube channel, Etienne's Place, for quite a bit of information, videos that we have there. So I want you to go to Etienne's Place. That is our YouTube channel. So always check that. And once you're there, of course, we invite you to like, share, hit the notification button, all those good stuff. In addition to that, today I'm excited to announce to you that we have had what I would like to call a soft launch of a new division, and this is our consulting services. So Etienne Business Solutions is predominantly, a CPA firm, a public accounting practice, and we do quite a bit of consulting type work. But we realized over the past couple of months, maybe up to a year, that the demand for, what we precisely call consulting services has increased for several reasons, and so it has been in our planning mode for a while, and it has come to fruition. So we have now launched our consulting platform, I tend to call it, and you'll be hearing a lot more about that as the weeks roll by. But just sort of giving you a heads up that whereas we continue to have our Etienne Business Solution, the certified public accounting practice going on and offering all the services that you have become accustomed to, we have now launched our consulting arm of the business, and that is what we'll be coming to you from time to time with. But more of that in the weeks to come. Today I want to quickly make reference to as a matter of fact, for those of you who have been checking out our YouTube channel, Etienne's Place, among the videos posted, you would have seen a video, I don't remember the topic of it, but it basically addresses the whole implication of tax liability in different circumstances, tax liability depending on where the work was done, depending on where the taxpayer lives, and this whole question of whether or not we are being double taxed, and if that is so, why. So today I just want to spend a couple of minutes looking at this topic that I call multi-state tax liability. Multi-state tax liability. Simply put, if you're one of those persons who work in a particular state and you happen to reside in that state, so you live in Georgia, in Tennessee, in Florida, and you work there, then chances are, you will not have to contend with this multi-state tax consideration. But there are a number of persons who may work in one state, but lives or is a resident of another state. So the question sometimes, arises: do I need to pay taxes in the state where I earn the income, and also pay taxes in the state where I reside, the state for which I'm a resident? The question and the answer here is a little more than just a yes or no answer that goes with that question. So let's look at the two possible scenarios, or three as a matter of fact. Now, once you live in state A, but you earn your income from state B, you work in state B, then of course you're going to be contending with what we call a resident, you're a resident of a state and you are non-resident of another state. So, for example, if you really live in Florida and that's your state of residency, you're a resident of Florida, but you happen to work in Georgia, or you earn, from Georgia, you work in Georgia, then yes, for income purposes and for the tax implication on those incomes, you're going to find that there are some Georgia consideration and Florida consideration, but we'll come into that Florida aspect of it a little later on. So in filing your taxes, your tax returns, usually you will file the regular federal tax returns that everybody has to file. But in addition to that, you will find that you may be required to file two state taxes. One would be a resident state tax, and the other would be a non-resident state tax. Okay, resident state tax, non-resident state tax. And so each state is requiring that you report the income through filing a tax return. One is a resident tax return, one is a non-resident tax return. And so the question then is asked, do I then need to pay taxes to both states? The state from which I earn the income, where I work and earn the income, and also the state that I'm a resident of. And here's the two aspects to that answer. The two aspects to that answer is simply this. You may find that two states have what we call a reciprocal arrangement for tax purposes. Reciprocal arrangement. And that basically is an effort to prevent this double state taxation. So what it is saying is, if state A has such an arrangement with state B, then the agreement is such that, all right, if an individual lives in state A, works and earns in state B, and is paying taxes in state B, then we will not be charging or levying a tax on that income in the other state. So there's an understanding, or there's an agreement between states that we will not do that. Now, tax preparers will be aware of what I'm about to say, but even you as a taxpayer, you may be knowledgeable of this also. There are times when you're preparing a tax return, your tax returns. Yes, you do the federal, and then you come to prepare the state returns. After you've prepared one state return and you go to prepare the other state returns, you find that sometimes you get a little prompt that says you are required to attach a copy of this other state tax returns to this state return. So for example, let us say you're filing the regular federal and you're filing a Georgia tax returns and a Louisiana tax returns. You could find that when you're preparing the Georgia tax returns, because you had already prepared that Louisiana portion, then the Georgia tax returns prompt you to say you are required to attach a copy of that other state to which you had already paid taxes, which in this case would be Louisiana. So you would attach a copy of the Louisiana state taxes to your Georgia state tax. And when that goes into the revenue department, it will see that, oh, so he has already paid some taxes over Louisiana. So let us avoid this double state taxation possibility. All right? And so that is what happens. So we have this thing we call a reciprocity, okay? A reciprocal arrangement where we say, okay, we will not impose a double state tax on this person. Not doing that. Good. There's another situation where, let us say that of the two states that we're talking about, one is, say, Georgia and one is Florida. Now, right off the bat, there are some states, Florida being one such, that does not have a state income tax filing. Okay, that's what they call no state tax state, so to speak. And there are several of them. There's Texas, Florida, and a couple of others. But we just deal with that scenario, this example, using Florida. If that was the case, then you will find, and let us assume, we can look at it both ways. Let's assume that the resident state is Florida. This is where I live. I'm a resident of Florida. I earn in Georgia. I work, earn in Georgia. Then I would normally have to file a non-resident tax for Georgia because I'm not a resident of Georgia. I just work and earn in Georgia. Normally, I would have had to file a normal resident tax returns for Florida. But then, as I said earlier on, because Florida is such a state that does not require this state tax as Georgia would, then you end up doing what? A non-resident tax returns for Georgia, but there's no state tax returns for Florida. All right, so that again is the case. Because remember now, if you were working in Florida, you would see on your W-2 where yes, they deduct federal taxes, withhold federal taxes, but the state, they would not, on your W-2 you would not see any state, or on your pay stub, which eventually flow to your W-2, would not show any taxes, state taxes withheld for Florida. But because you actually earn in Georgia, then, and Georgia is one where there's state tax to contend with, then you would have a non-resident tax returns for Georgia that would show taxes. But then Florida, which is your state of residency, there would be no returns because it is such a case. So that is very clear. So just want to point that out because sometimes persons are concerned to say, okay, I live here, I've never changed my residency. Now, a slight variation to this thing is where you decide that because you're going to be in another state for an extended period of time working, then you wish therefore to, as it were, transfer your residency to that state. And so you ask, what is the implication to the original home state? No implication because you have shifted your residency. So you now work, earn, reside in Louisiana, for example. Although your original home and maybe your family home and everything is still back here in Georgia, but you had decided to shift your residency, and so there's nothing to contend with because you're not filing a Georgia tax return at all. Okay, you never earned in Georgia, did not maintain residence in Georgia, so there's no Georgia tax return to contend with. Very important. On the same matter of multi-state tax and the question as to whether or not one is being taxed, double taxed, let's look at retirement income or retirement distribution, whatever you call it. Some people say it's not income anymore. You had earned it, it was put aside, and now it is being distributed to you. Fine. So your distribution from your retirement account. Let's look at that. In a number of instances, individuals would have worked in a particular state, earned in that state, have their monies put into their retirement plan while working in that state. Let's just say the New York, huh? Good place to have a pension from, yes, New York. But as you retire, you decide, I want to come to the warmer side of life. So I'm going to come down south. I'm going to come south. So you come to Florida, come to Georgia, you come to Tennessee, wherever you go. But you're moving away from the cold. And now, while you are basking in the warmth, you are receiving your retirement distributions. The question again is asked, am I going to be paying taxes on this distribution to, say, New York, where I had worked during the time of generating this retirement, income, this 401k? And if that is so, will I also now have to pay taxes in Georgia now that I have decided to relocate to a warmer climate? I'm not going to mention Florida and Tennessee anymore because they are part of the no state tax states. But the person decided they want to come into Georgia. Here's the principle. The principle is on retirement income or on retirement money distributions, You do not pay taxes to the state where the income was earned. You were working in New York, you had monies taken from your salary, from your paycheck, and put into your 401k plan, whatever it is. You have retired, you decide to move to Georgia, you're getting your distributions, and of course, you have some taxes to pay. Because remember that those monies were taken out of your paycheck pre tax, they were not yet taxed. Okay, we had gone through that a long time back, and you can always refer to my, as I said, my YouTube channel, Etienne's Place, and you will see videos to do with all those things. But bottom line is that now that you're getting the distribution, yes, it is taxable. But the question is, am I going to be taxed by the state where it was earned and also be taxed by the state where I now reside? The answer again is simple. Those retirement distributions income are not taxed in the state or by the state where it was earned. It is taxed by the state where you now reside and is receiving the distribution. So two things to note. If I had earned and my 401k monies came about while I was working in New York, and then I decided I'm going to leave and go reside in Tennessee, and if I'm hearing that it is taxed at the state in which I'm now living as a retiree, and not the state where it was earned, then it is saying that, okay, I avoided or delayed heavy tax hit back in the day when I was working in New York. But now that I'm receiving distributions, I reside in either a low or a no state tax location. Okay, either a low or a no state tax location. I'm just using Tennessee for that example. So if you notice, you actually come out with a win-win situation. You averted or you avoided heavy tax back years ago because those monies were transferred pre-tax into retirement fund, and now that you're getting a distribution, because it is not taxed by the state where it was earned, but it's ought to be taxed by the state where you now reside as a retiree, that state could either be a very low state tax location compared to New York, or it could be simply that state does not carry any state taxes. Very good. Very good. Put on top of that, you would have averted maybe taxes on those income, maybe at 20-25% back then because you were in a higher tax bracket. Now that you're receiving the distributions, you have stopped working, so your overall earnings has gone way down, and so you're way down in a lower tax bracket. And so even if you're now being taxed, you're being taxed at a much lower rate, because you have to be taxed at your current tax rate, not whatever it was 25, 30 years ago when you were working in New York. No, you have to be taxed at the effective rate now. Okay, so all those factors come into play to determine exactly, one, whether or not you're going to be double taxed, and two, having determined that no, you're not going to be double taxed, you may find that even that single tax is still at a very, 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 very advantageous rate, because of the fact that a change in state and a change in your earnings would have significantly impacted your tax debt, because your tax bracket would be much, much lower because you're now retired. You're now enjoying the sun, sipping a pina colada, listening to some soft music. You're not exerting yourself. So you're in a very low tax bracket. And it's all good. It's all good to go. So that's it. Good. And those are the two bits that I just want to mention to you this evening. A lot of information on this whole tax matter can be found again. Don't remember the name of the video. You know, they all come with their labels and their titles. But go and enjoy yourself on all the different videos I have. You will come across several having to do with taxes. But I just thought that I would kind of rehash that one by just adding those two components, which are very important because we have had questions from time to time on this matter of the possibility of being double taxed because of those circumstances and situations that we previously outlined. So that's it for now, guys. Again, check out my YouTube channel, Etienne's Place, and have yourself a ball. Quite a bit of information is there. And again, as I said earlier on, we'll be touching base with you from time to time in the coming weeks as we continue to enlarge our territory under Etienne Consulting. Etienne, as a matter of fact, our company name is Etienne Strategic. Etienne Strategic Management Consulting. Etienne Strategic Management Consulting. So you'll start to see things coming from us, and quite a bit of information that I know you will find very helpful, especially us business operators. So that's it for now, guys. Have a wonderful rest of the week, and I'll be coming back to you next Tuesday at 8 p.m. As usual, I like to encourage you, work hard, stick to the task, and just, just be successful, and God bless.